Hello everyone. Welcome again to our accounting series, Income Tax Edition. So, itutuloy lang natin yung part 1 ng itemized deductions. So, this video will discuss the remaining itemized allowable deductions for gross income. So, ang first na allowable deduction na ating discuss for part 2 is depreciation. So, for depreciation, we have 4 methods. So, we have straight line method, we have declining balance method, we have sum of the year digit method, and fourth is any other method which may be prescribed by the Secretary of Finance upon recommendation of the Commissioner on Internal Revenue. So this kind of depreciation methods naman, we will be familiar more dito sa depreciation method na to in our intermediate accounting subjects. So, yun. So, special rules for depreciation to be the allowable deduction. First is the life tenancy to a property. So, for example, ako, naninirahan ako sa isang bahay na hindi ko naman pagmamay-ari. So, pwede siyang maging allowable deduction sa part ko kasi the deduction shall be computed as if the life tenant were the absolute owner of the property and may kakayahan akong gamitin yung property na yun. Second is property held in trust. So, para maging allowable deduction to, it shall be apportioned or dapat mahati siya between yung income beneficiaries and yung trustees in accordance dun sa provisions na isinulat doon sa instrument of the trust. So, to put it simply, kung ano yung sinulat sa trust na dapat paghatian noong income beneficiary and trustees for allowable deduction, yun lang ang pwedeng ma-deduct sa kanilang gross income. So, if ever naman na magkaroon tayo ng case na walang instrument of the trust, walang written agreement, so ang magiging basis natin is the trust income allowable to each taxpayer. So, next naman is for the evaluation on properties. So, for a revalued property, the depreciation of an asset must be premised on its acquisition cost. We have to remember again, dapat ang model na gamit natin for depreciating the asset must be the acquisition cost model and not on the reappraised value. So, yung mga taxpayers na gumagamit ng revaluation model in accounting for the items of property, plant, and equipment or short PPE under the PAS 16 are not allowed to deduct the depreciation of the revaluation surplus on the value of the property kasi hindi siya yung actual cost. So to make it simple, basta ang model mo ay revaluation model, X na agad. Hindi na siya allowable deduction. And to add to that, yung mga impairment losses natin sa ating mga PPEs that are recognized under PAS 36, hindi din siya deductible. So, magiging deductible lang siya when yung property ay sinustain natin or the asset has retired. Kumbaga, hindi na siya ginagamit for business. So, for the rules on depreciation of passenger vehicles, meron tayong 4 na special rules. So, una, dapat yung pag-purchase natin ng specific vehicles, may kasama siyang sufficient evidence such as yung mga official receipts or other documents na magpapatunay, magsasubstantiate sa kanya na biniling natin yung isang specific motor vehicle at a total purchase price of this particular amount. So second, again, yung passenger vehicle na yon dapat may direct connection siya or relation doon sa development operation, sa business, or profession of the taxpayer. Again, magiging allowable deduction lang siya kapag ginagamit natin siya sa business, sa trade, or sa profession natin. If you will use it for personal purposes, hindi na siya pwedeng maging allowable deduction. So, it is important to remember that. Third naman is only one vehicle. So, yon. Hindi lahat ng vehicle na bibilhin natin sa isang year ay allowable for deduction. Kasi madaya na yun. So, only one vehicle for land transport is allowed for an official and an employee and that value. Again, ito important to remember, that value shall not exceed 2,400,000. So, fourth rule, no depreciation shall be allowed for yachts, helicopters, airplanes, and land vehicles which exceeded yung threshold natin na alin ulit? 2,400,000. Unless, may unless tayo dyan, unless yung business nung gumagamit nito ay transport operation or lease of transport equipment. Example, yung mga airlines, yung mga ferry boats, operation, ganyan. Kung yun naman talaga ang kanilang business or trade, pwedeng magkaroon ng depreciation na i-compute doon. So, effective October 17, 2012, yung vehicles not conforming with these rules, yung 4 na rules, ay referred to as non-depreciable vehicles for taxation purposes. So, it is very important to remember yung 4 na special rules natin when depreciating passenger vehicles. Next, we have an illustration here. So, a store building was constructed in January 2010 with a cost of 570,000 pesos. So, ang estimated useful life niya is 16 years with a scrap value of 70,000. So, on January 5, 2015, nagkaroon tayo ng replacement for some worn-out parts of the building costing 50,000. So, after the repairs, the building was appraised with the fair market value of 770,000 pesos. So, magkano kaya magiging allowable deductions natin for depreciation for year 2015? So, to solve that, we will get muna yung original depreciable cost. So, to get that, if may scrap value yung PPE natin, we will deduct that from the cost noong mismong equipment. So, 570,000 minus 70,000, we will have 500,000. Tapos, ileless naman natin yung accumulated depreciation mula noong binili siya noong January 2010. So, January 2010, December 31, 2010, that's 1, 2010, 2011, 12, 13, 14. So, 5 years na yung lumipas. So, para ma-solve siya, i-divide natin yung cost sa useful life ng 16 years, tapos ita-times natin siya sa lumipas na years na ginamit natin yung building na 5 years. So, if we will compute for that, 500,000 divided by 16 times 5, we will get 100,056,250 pesos. So, magkakaroon naman tayo ng book value ng 343,750. Pero hindi pa yun ang ating new depreciable cost. If ever na gumastos na tayo ng pera to replace some worn out parts of the building. So we will add that cost of replacement of 50,000. So we will arrive to our new depreciable cost of 393,750. Then we will divide that to the remaining life of the asset, which is 11 years, 16 minus 5. So ang depreciation natin for 2015 will be 35,795.45 centavos. So next is for depletion naman. So ang depletion naman is a provision for the periodic return of capital investments in wasting assets such as, yung mga examples niya ay minerals, gas, and oil. So, ano na bang treatment natin for tangible development costs? So, una, it includes the acquisition or improvement of tangible property which are of a character subject to the allowance for depreciation. Para naman sa mga tangible exploration and development drilling costs, ito naman ay ikakapitalize natin and i-deduct through allowance for depreciation subject again to following rules. So first, para sa ating petroleum operations, so if that property is directly used in petroleum operations, we can use either dalawang method, straight line method or declining balance method. And the useful life of that property shall be 10 years or such shorter life as may be permitted again by our commissioner of internal revenue. So for the properties not used directly in petroleum operations, ang allowed lang natin is straight line method. And it shall have a useful life of 5 years. So for mining operations naman, dapat ang normal rate of depreciation if the expected life of the property used in mining is 10 years or less. So if ever naman magkaroon tayo ng case na ang useful life ng equipment natin or PPE is more than 10 years, pipili tayo ng any number of years between 5 years and 10 years kung ilang years lang natin siya pwedeng i-deduct. So, we have an option to choose. Sunod naman natin is yung tax treatment of intangible exploration and development costs. So, before commercial production, it shall only be capitalized. Capitalized lang siya as cost of the wasting asset. But after the commencement of commercial production, for non-producing wells or mines, it shall be deducted in the period paid or incurred. So, it shall be deducted in the year na binayaran siya or nagawa siya. And for producing wells or mines, meron naman tayong two options. It's either we capitalize it and amortize it using the cost depletion method, which I will discuss mamaya, or we will solve for it to be deducted in the year paid or incurred, katulad noong non-producing wells or mines. So, we have an illustration here for depletion. So, Petro Drill Corporation incurred the total development cost of 120 million pesos to bring its oil well to commercial production in 2019. So, the following were the results of its extraction activities until 2020. So for 2019, we have barrels extracted amounting to 4 million, and we have estimated barrels na 56 million units. So for 2020 naman, we have a total of 9 million units of barrels extracted, and we have estimated barrels remaining of 36 million units. So how do we solve for that? So ang formula natin for cost depletion method is tax basis of that wasting asset times the units extracted divided by the total estimated units. So, para makuha natin yung total estimated units, we will get the units extracted for the year and the estimated remaining units. So, for 2019, we will divide 4 million, which is yung units extracted natin for the year, divided by yung total estimated units, paplasin natin units extracted, plus yung estimated remaining barrels natin ng 56 million. Tapos, times 120 M, we will arrive to a depletion expense of 8 million for 2019. So, ang magiging tax basis natin for the following year will be 112 million pesos. So, to solve again, for 2020, we will divide 9M sa total estimated units natin na 45M times 12 million or 112 million rather na tax basis natin. So, we will arrive to 22,400,000 na depletion expense for 2020. So, if we will deduct this to our last year's tax basis, we will have a tax basis for December 31, 2020 of 89,600,000. So, additionally, we have charitable and other contributions na contributions or gifts made to a government or non-government organization that may be deducted against our gross income. So, itong charitable and other contributions, madalas din siyang lumalabas sa board exam. So, we have to remember yung requisites to claim for deduction on this following contributions. So, first, the donor institution must be a domestic institution. Kumbaga, dapat isa siyang domestic organization at hindi siya owned by a foreign company and such. So, second, no income of donor institution must inure the benefit of any private stockholder or individual. Third, the contribution must be valued at the tax basis of the property donated. Again, i-value lang natin siya sa tax basis noong property na dinonate. For again, the taxpayer must be engaged in trade or business. Fifth, the donee must issue a certificate of donation which includes a donor statement of values. And lastly, if the amount of donation is at least 50,000 pesos, the donor shall file a notice of donation to the RDO or Revenue District Office where he is registered within 30 days upon receipt of the certificate of donation. So we have two classifications of contributions. First is fully deductible contributions and B is the contribution subject to limit. So, ang gagawin nating illustration is limit of deduction for contributions. So, based on the taxable income derived from trade, business, or profession before the deduction of any contributions, We have 10% for individuals and 5% for corporations. So to illustrate that, we have a simple problem here. An individual taxpayer had the following contributions. So we have 20,000 pesos for family Fatima Catholic Church rather, for beggars na 500 pesos, the Polytechnic University of the Philippines 25,000 and Barangay Tikapo na 10,000. So dahil individual taxpayer ang gagamitin nating limitation is 10%. So to arrive for 30,000, ang total amount of contributions na deductible is yung church na 20,000 at yung 10,000 na barangay tika po. So bakit hindi kasali yung beggars? Kasi beggars is not a domestic institution. Hindi siya domestic institution. So, hindi siya deductible. Eh bakit yung Polytechnic University of the Philippines? Kasi, sa pagkakaalam ko, ang PUP is not a qualified donee institution. So, ang amount of contributions lang na deductible na pwede nating uh, gamitan ng 10% is yung dalawa lang, church and barangay tikap. So next, we have contribution to pension trusts. So the requisites of deductibility of pension expense, first, the employer must have an established pension or retirement fund to provide payment of reasonable pensions to employees. Second, the actuarial assumptions used by the fund must be sound and reasonable. So, itong actuarial assumptions, madidiscuss to thoroughly sa inyong intermediate accounting 2. So, third, the fund must be actually funded by the employer. Fourth, the fund assets must be independent from and not subject to the control or disposal of the employer. Fifth, contribution for current service cost is deductible in full. And sixth, the contribution for past service cost shall be amortized over a period of 10 years. So, ang rules natin for computing the deductible pension expense, first, the contribution to the fund is first attributed to the current service cost which is deductible in full. Katulad sa sinabi ko kanina sa rules natin for its deductibility. So the excess funding is attributed to any unfunded past service cost. It shall be again amortized over 10 years regardless of the actual vesting period of covered employees. And third, overfunding of the fund is a prepaid pension expense deductible in the future as funding of future current service costs. So, lastly, we have research and development or R&D costs. So, ang research activities is defined as geared towards discovery of new knowledge. And ang development activities naman is geared towards determining application of the research knowledge na nagain natin from the research activities. So, paano ang tax treatment natin for R&D costs? So, if it is related to capital accounts, it shall be capitalized as a part of the cost of the property and it shall be deducted through depreciation expense. And if it is not related to any capital account, merong dalawang option ang taxpayer. It's either outright expense, i-expense natin agad, or Gagawin natin siyang deferred expense na i-amortize natin over a period not less than 60 months, beginning from the month that the taxpayer realized benefits from its R&D expenditures. So, yung other deductible expenses naman natin is we have 16. So, salaries and allowances, fringe benefits, SSS, etc., commissions, outside services, advertising, rental, insurance, royalties, repairs and maintenance, entertainment, amusement, and recreation expenses, transportation and travel, fuel and oil, communication, light and water, supplies, and miscellaneous expenses. So, that ends my discussion for itemized deductions part 2. Thank you for listening until the end, and don't forget to check the description box for the practice quiz na hinanda namin para sa inyo to know if nakinig ba talaga kayo sa aking discussion. Again, thank you and God bless to all.